Well, a lot of people, for some reason, they think if you spend $1,000 on an item that's work related, you get $1,000 back from the government and it's all free. That's not how it works at all.
Anyone that says in their business that they just pull the trigger on everything, they've either got a massive money fucking pit from an inheritance somewhere, or they're just fucking lying straight to your face.
Yeah.
Because as everyone knows, when you're in a shit spot, it's a lot harder to get money than it is when you're in a really good spot. And do you take advantage of getting it now? Or do you fucking try to get it back?
That's such a massive point. If you see yourself going down a direction where things are getting tight, speak to a broker well before that period happens so you guys can plan and strategize and make sure everything's in place. If things are already fucked by the time you get to the broker, you've pretty much got no chance to fix it.
Alrighty guys, welcome back. I think this is episode 4 or 5. I'm fucking unsure, but season 2. So today is a bit of a different one. I did make a thing at the start of the year that I wanted to expand on this podcast and give you guys, number one, a little bit more context into my personal life, and number two, get on different guests from all walks of life. So this is exactly what we've done today. Now we have my very own personal broker, the guy that I use for my personal stuff and business stuff as well. We've been working together now for, I don't know, what fucking...
Maybe 2-3 years now.
Yeah. And he was fresh when he moved up here. So we were looking at his office space and stuff back then. But yeah, so Jem from B Money is joining us today. Thank you very much, dude. You're a fucking very busy man and always on the phone and getting, when settlements are coming close, it's always a fucking busy time for you. So I do appreciate you taking your time out of the day, and I fucked you around and slipped you a little bit later today as well. So I apologize for that. But yeah, so we were just talking about it off camera, but nothing that we're talking about today, guys, is anything related to financial advice at all. Yeah, we're just going to be talking about our own little journey as well. Jem's going to be sharing stuff about his journey. And then I'll be telling you guys a little bit about what I'm doing with him and what we have done and all that sort of stuff, and how, the pros and cons of doing it, and how you guys that are tradies, whether you're an apprentice or a carpenter or a builder, whatever you are, how you can get into the market or do whatever you want to do, and how I've been able to do it. And as a business owner, it's not that easy. So Jem, thank you very much for coming on. But before we get started, talk to us a little bit about you, man, how you started in, brokering, and what pathway did you take to get there and all that sort of stuff.
Well, actually, most of my adult life, I was actually a chef. So I worked at a lot of high-rated restaurants across Australia. Some of the best in the world at the time. Yep. I always had a passion for cooking, and that taught me a lot in terms of discipline, structure, and obviously looking after the client. I got to a point where I was head chef and executive chef at a few different places, but I feel like when you're working for someone, you are always capped. And when you are in those sorts of roles as like a head chef or executive chef, you pretty much treat the place like it's your own business anyway. So you're working late night, you're working weekends, you're doing food costing, you're doing wages, everything, that entails. But you're also capped in what you get in return for that. And I've always been interested in investing and numbers and property and that sort of stuff as well. So I actually reached out to someone that I'd sort of known in my circle through friends of friends, which was Bora from B Money Finance, who's the founder. And asked him pretty much to give me the chance, and I worked there for about 6 months just learning, pretty much just doing all his data entry, helping him with servicing. It's pretty much just following him around, doing whatever I could to learn. And he's pretty much mentored me up to the point now where I've been able to move to Brisbane, open my own office. It's now been open for a couple of years, and things are going very well.
Yeah, no, that's good. Because I remember when you moved up here, it was just you. Yeah, in the office, just Jem, just all by himself, and then over time now you got like 4 or 5 people now. It's fucking which is good. You know what I mean? Especially in that space where it's which is really good to see. But so talk to me a little bit about obviously the move from, because I think it was Sydney, the move from Sydney to Brisbane, and obviously new market. Because I remember the first thing up here, right? It was new state. I don't think you'd ever really been up here that for extended period. So obviously you're relying on local inquiries. Like you would probably be still servicing people from New South Wales, but for the vast majority, you're going into a new area where there's no one that you really know.
No one knew me, absolutely. But I feel like the good thing with our industry as well is that we do service Australia-wide, so we're not limited, even though we do now have a hub in Brisbane and all of our clients are in Brisbane, but we still service nationwide. So it wasn't a big limiting factor. But I think the move itself, was just, I love the idea of Brisbane and what's been happening here over the last, 5 years. You can see the exponential growth, and I feel like it's still so underdeveloped and there's so much potential. So yeah, and that's definitely shown itself over the last couple of years. I definitely don't regret my
And
decision.
you've also invested in Brisbane as well,
100%.
or Southeast Queensland
Absolutely.
as well.
Similar to yourself. I mean, I've been watching you grow as well.
Yeah.
But yeah, I've personally bought 3 properties in Brisbane in the last 12 months as well.
Yeah. So for anyone that doesn't, I'll give a little bit of context in regards to this, the relationship that we've got. So I think I only had 1 property, 2.
I think so.
2?
Oh, did you have St. Lucia at the
I can't remember.
time as well? You might have, or you might have just picked up St. Lucia.
Yeah, I can't. Oh no, I did. I just had
Yeah.
it. Yeah, before I met you. So I had 2 when I met Jem, and then over the period of that 2-3 year period, now we got 4. So
Crazy.
yeah, like it's not extravagant numbers, but we, being mindful, you also running a business, and I've got 2 kids, and there's life goes on.
You're still in the small percentile of people that have like 2 or more properties.
Yeah. So, Jem's obviously been able to help me, and I have also pushed him forward to other people that I know. As a business owner, for you guys that don't know, it's not that fucking easy to go straight to a bank and go and get finance for fucking anything. Maybe the one property you're owner occupier, that's fair enough. But for the vast majority, especially when you're starting out, you sort of looked at it a little bit of like a liability, essentially. Like until you get some fucking teeth in the game and you're in it for a while. For the vast, for the first, I don't know, 6-7 years, I couldn't even get 10 grand.
Yeah.
Like it was so fucking hard for a bank to give me money. So, my pathway was a little bit different to purchasing. It was, I think I went through Aussie, and then I met you. And then it was sort of just, it was sort of night and day really, because I was just like, listen, like I wanted more options, and I wanted someone that was going to help me sort of navigate it and plan it. And I think that's the difference, all right? So me and you have gone through multiple exercises of
100%.
planning and understanding where we need to be, where you need to position yourself, because my biggest thing previously was that you would get to the goalpost and it'd be too late to make adjustments because it's all done and dusted. And then you got to wait again. So I'm a big advocate, and I would recommend it for any guys that are in business, is to speak to a broker sooner than later. Get them, like, tell them your plan and what you want to do, and just ask them, like, with this plan, where would I need to be at? And they'll tell you. And then at least you have some sort of, lanes to sort of keep to. And I think that's what me and Jem have been able to do. And, he's still consistently helping me with that now, not only with personal stuff, but the business stuff as well. So, I would highly recommend that if anyone is a business owner, go to a broker and go down that path. Because, otherwise it's going to be really fucking hard. And it takes a lot of fucking energy, dude, when you go the other way, going to a bank. So,
100%, man. I think we review your situation every 3 to 6 months probably.
Yeah.
And even well before the end of the financial year. So we're working with you and your accountant, obviously understanding your plans, and then making sure we're hitting those targets to achieve what you want to do in the next 12, 24 months, whatever it might be, right? A lot of people go speak to a bank or a broker after they've already lodged their tax returns, trying to minimize tax and all these sorts of things where minimizing tax and getting loans for assets don't usually work hand in hand.
Which is something that I actually got on my little device to talk about, is the whole tax thing. And people, like, I literally had a guy message me two nights ago, and said to me, how do you go about like preparing for tax returns and like minimizing the amount of tax? And I was like, it's funny though, because I used to think like that. And I think it's very much like that in the tradie community. To minimize your tax, get tax write-offs, go and get that vehicle, go and buy that tool. The amount of people that would say that to me, and they sell it like it's almost like they're giving it to you for free. Not the tax write-off. Doesn't mean it's fucking free, mate.
I don't think a lot of people actually understand how that works.
Yeah. Well, fucking explain it to me. Yeah. Well, you go.
Well, a lot of people, for some reason, they think if you spend $1,000 on an item that's work related, you get $1,000 back from the government and it's all free.
No.
That's not how it works at all. Pretty much the way it works is, let's just have a hypothetical. Say you earn $100,000 of profit. If you spend $1,000 on something that's work related, your taxable income becomes $99,000 instead of $100,000. So you do get a little bit of money back, but you're not getting like a whole $1,000 back. So
and I think for the vast majority, how they market it and how a lot of people get sucked into that fucking thing of spending money when they shouldn't spend it
100%.
is they market it as if you're getting it for free. Like, it's an instant tax write-off. Who gives a fuck? Like, it doesn't fucking matter. You know, I'm now, at the point now, like, we pay an exuberant amount of tax. It's fucking crazy. But it's like, I'm also not just purchasing things like where we purchased we're about to purchase 2 vehicles, and we've done bits and pieces, but I'm not doing that for the fucking taxable part. I don't even think me and you have even spoken about that.
No.
I haven't even spoken to my accountant about that, because to be honest, it's not why I'm doing it. Like, we're doing it for a different reason. And I think that's where a lot of guys need to, when you are in business, like, if you've got a plan, you're going to do something, do it irrespective of the result of the tax thing. Unless you are like making millions of net profit, right? After you pay all your shit, you're making that net, and you've got an exuberant amount left over, and then it becomes a problem. That's fine, but that's a fucking good problem to have.
Absolutely,
right? That's a really good problem to have.
Yeah, different stage to what we're talking about.
Exactly.
We see guys that, you know, are turning over $100,000 a year and writing off $100,000 of expenses and showing zero income, so they don't pay tax.
Yeah,
and then they're coming to us to try to get loans, and it's just like, bro.
Would you say the vast majority of your clients are mum and dads or are business owners?
Honestly, we deal with a lot more complex deals with self-employed clients
Yeah.
and debt consolidation, ATO debt, self-employed clients trying to buy a property and have no idea for exactly what we're talking about, not showing how, writing off too many expenses and working with them to put a plan in place. I feel like if you are sort of just a mum and dad, owner-occupied person, they probably just go straight to the bank. There's not much we can offer them that's different. Obviously, we have that service. We make it easier for them and get the approvals a lot more,
but you guys are really doing the complex sort of stuff.
Yeah, you come to us because you need a solution, and the bank won't know how to handle it, right?
Yeah.
And that's where you can make good money and make good referral partners as well.
Yeah, for sure.
What you can do.
Yeah. Yeah, no, that's actually true. Yeah, because it's like, for me, it's complex. There's so many moving parts. Like, you got trust, and then you got companies, and then you got personal stuff, and then you got fucking this and this and this. And you try to set things up a certain way, and it doesn't fucking work out like the last fucking way. And right? So let me talk to you about that. We want to talk about a real life thing. We went through a purchase on, I think the most recent one. And I'm not going to go, as I said, I'm not fucking talking about financial advice or anything like that. I'm just talking about, you just look into it if you want to know. But you can purchase things with, like, underneath the trust, and then if it neutrals itself out, you can get your accountant to write a letter, and then it can pretty much shelf it, and you can go for servicing again, essentially, on that amount.
Yeah, you don't have to include it in your liabilities.
Exactly, right? So you can go through and do that if that's set up correctly. So me being me, and we've gone through and we've done it, and this comes back to having the right team in place. At this particular point in time along my journey, I didn't quite have the right team in place. I was in between accountants, and push come to shove, we got it done. And then after the fact, it was fucking showing, and we were like, what the fuck?
Yeah, it was on your credit file. And obviously that negates any benefit of doing it in the trust in the first place, which we're trying to do, right?
Yeah.
I do remember having a pretty detailed conversation with you and your accountant, and we're trying to do it with a commercial trustee from the beginning. I think she was recommending against it. I don't know if it's cheaper because you don't have a corporate trustee structure. I assume potentially why.
I got no idea. But it was, for the company anyway, for like the company side of it, we've got the company, and we've got the Ideal Group Trust, which trades through the bucket and fucking all that sort of stuff for the company. But this is the thing, it's like almost like not above my pay grade, but I guess you trust your advisors that you've got. And I think for me, the accountant that I've got now and the accountant that I did, it's night and day.
Yeah.
Like, the one that I got now is very proactive. Like, same sort of thing. I sit down with her and I tell her my goals.
Yeah.
And then we align to that, and we put things in place and ready for that.
100%.
Where previously I had probably not so a proactive accountant. We were going to her with what we wanted, and then we were waiting for it, and then we would be chasing it up. So, for you guys that are going along that journey, as a business owner, there's really only, like, you really need a really good accountant that's going to be proactive. 100%. And that's, doesn't need to be dodgy, doesn't need to be someone that's going to fucking like do all that fucking backdoor shit that you want to, guys always get their dick hard over. You just want someone that's going to be, like, really proactive for what you want to do and understands what you want, right? So for me, that was it. I was with that first accountant I think I was with her for maybe 8 years, but I didn't know what I didn't know. So went with a new one, slightly more expensive, but the service is way better.
Was your old accountant a bit upset that you were leaving her?
No.
Did they say
so they went through
about
a
it?
merger. So this is how it all happened. during that period of that transaction, that one there that we discussed, they originally, at the start, they were their own company. Halfway through the transaction, when we were trying to get everything sorted, they merged.
Right.
Then I got appointed a new accountant after the merger, which I wasn't happy with. So then during that whole fucking phase was probably where shit got lost.
Right.
Right. So it's just one of those things. It just happened, and I think we spoke about like how we could reverse it, and it was going to result in fucking
stamp duty, and all that sort of
which
stuff,
I didn't want to do.
Which makes sense.
And yeah,
but I think now with the plans that we're talking about, it sort of doesn't matter anyway. You know, I mean,
yeah,
we'll see what happens with that one. Anyway.
Yeah, which we'll just work around anyway. But yeah, so that's something that I would I would definitely look at doing, guys. Is get yourself a good accountant and a good broker, and you know, work out the plan that you guys want to do. But
Absolutely.
The next thing I want to talk to you about is, you know, we talk about growth within the company and yourself, and how there's almost like a false sense of people look at a certain business and they assume that when you're growing, you assume that you're banking just a shit ton of money, right? We're going through that at the moment. So we're in a growth phase. And it's funny because Tamara always says to me, oh, you know, I feel like we've been in the growth phase for fucking ages. But you sort of need to be. Like, for the industry that we're in, we need to break through the crust of where we're at to get in that golden handcuffs era where you sort of break through. So otherwise you're just spinning in wheels,
100%.
right? So in order to grow, and I think this is a numbers thing as well, I'm going to talk to you guys around, let's just say for instance, in our industry, normal terms, our margin might be 10%.
Right.
Do $1 million, you net 100 grand.
Exactly.
Doesn't mean I got 100 grand in the bank. Let's just make that fucking clear. But let's just say on paper, you net 100,000. If I decided tomorrow that I wanted to bring on a new supervisor or a new estimator, and they cost me 100 grand, that $100,000 is not chargeable, right? So it's got to come out of something. So if you can just imagine $100,000 salary, it's got to come from somewhere, which usually comes from margin. So you need to then recoup that by making more revenue. So $100,000 salary, I need to then do $1 million of revenue on top just to break even for that extra staff. Yes, before anyone chimes in, you can get washed up in a thing, but I'm just using it for standard calculations. So and you usually, in those particular roles, you don't see, same for your industry as well, probably, you don't see instant result like that. It takes time.
Absolutely.
It takes, like, if I employ an estimator now, I will not see any benefit from what they do for 6 to 8 months, usually. And then it starts to wash through. So you got to float that wage for that period, which where a lot of guys get wrong is you can look at your account and you can start thinking you're going backwards. But the reality is you're not. The heads that you've got and everything that's in motion is where the money is. 100%. That's where the profit is.
You're putting in the groundwork for the growth, man. You need to have the foundations ready to be able to support the growth.
Yeah.
If you can see the trajectory, same for us, whether it's lead gen or whether it's your clients and your partners, if you can see the workflow and the incoming work consistently growing, and you're questioning whether you should, you know, invest more money into the company to support the growth, it's either you can stay small and that can be quite profitable, or when you go through that growth phase, you're going to be comfortable with taking a couple steps back to take even more steps forward. And that's something that I know you've gone through, something that I'm definitely going through now, is I could have stayed smaller and earned more money in the shorter term. But I know what I'm doing is going to result in more income for the business and for the people around me.
And probably a better lifestyle.
Absolutely.
Right? So for me, I talk about it so many times. There's so many different levels to it. You know, we break it down into different tiers at our end, but it's like I could have easily stayed at maybe 7 guys, no real office, just working from home and cruised. Probably would have made, I wouldn't say more money, but net probably would have made easier netted profit. Right?
100%.
Doesn't mean more, just means easier made netted profit. Right? Easier on the mind, easier work, not that many headaches, blah, blah, blah. But it's like that thing. Do you stay in that and just cruise and close your eyes in 10 years' time and then go, fuck, I want to take the jump now? Like, is it too late? You don't know. So like for me, I never really stay in that pocket for long. Like I usually sit in it for maybe 3-4 months and then I go, fuck it, let's go again. So it gets hard though, because you start looking at yourself and you start thinking, is this shit working? And it's easier said than done, right? Like a lot of guys will say the mental load of growing is easy, like, but I'm telling you boys, for the guys that have done it, it's not fucking easy, right? Every single contract, every single bit, like, and I'm talking specifically, probably for the same for you. I don't think I've ever spoken to a business other than maybe the one unicorn that's on socials that's just banking fucking cash like there's no tomorrow. But for the vast majority of businesses, 99 out of 100, during growth phase, it's costing you.
Absolutely, 100%.
It is going to cost you fucking money, for sure.
It's interesting that you're talking about, that battle between yourself, whether, you keep investing in the growth. Is it worth it? Is that what you want? That's a constant battle that I think all business owners have. But as business owners, I think it takes a special type of person. And I think, within yourself, that if you decide to take a step back and you're like, you know what, this is enough for me, in 6 months from there, you're actually going to not be happy with yourself for making that decision and probably want to do it anyway. So you may as well just do it.
Yeah. And I think also who you surround yourself with. I had a conversation yesterday with a close mate of mine around this whole topic, because I'm having an internal battle myself, right? Even though we're in we're profit to profit on quarter, we're increasing revenue month to month, tick, tick, tick. Things are going well, but cash is still tight.
Of course.
So that just means that, the money's just being spelled elsewhere. It doesn't mean we're going backwards. It just means we're it's in the ether of the business. It's like in motion constantly, whether it's in debtors, employees, whatever. And I had a conversation with him around it, and he sort of said to me, he said it to me like this, and after he sort of phrased it, it was like, it sort of made sense. He goes, a lot of businesses that he finds, and he runs a pretty established business, and I think they do like, I don't know, $120 million a year, really good lifestyle. Super down to earth. You'd never pick it. Like the guy drives a fucking Corolla, but super nice guy. And he just said to me, he goes, a lot of the time, a lot of businesses, what they'll do is the ones that are the leanest and the meanest, the guys that are, always, dabbling with the cash flow and they're growing and stuff. Those ones there are always the ones that will move the fastest.
Of course.
They'll always grow the fastest, be better, and they'll overtake these guys that are slower. So the reason why he said that is because I was saying to him, like, the result of what we're talking about, right? Should I do it or should I not?
100%.
So I was talking to him about, do I do a liquidity injection or do I not? Like, I don't know. And he just said to me, he goes, it's the lazy way out, right? So he sort of said, for my particular situation, he said, listen, like, because we reviewed my books and stuff, and he said, for your situation right now, you're fine. It's a mental thing that you've got at the moment. And he said, like, put it like this. If I gave you $1 million right now and I put that $1 million cash straight into your account, would you wake up tomorrow and have the drive that you've got right now? Or would you be a little bit more relaxed? Fuck it. I don't need to bring on that higher. Fuck it. I won't chase up the debtor. It's only $2,000. Fuck it. You know what I mean? Would you really chase up the accounts lady to rec something correctly? Probably not. Right. And how he sort of phrased it is he said, like, that is what will make you slow, is by being lazy with it. Whether or not you say that you do or you don't, the money mindset around it is the same.
Who's this person?
So Adam.
Is it a good friend of yours?
Yeah.
Okay.
Yeah. So, it was funny when I was talking, because he, and he runs, he's got like an excavation company, but he was talking to me around it, and he wasn't saying not to do it and he wasn't saying to do it. He was just saying, like, that is the reality of where you got to be.
Can I ask what the next steps are for you in terms of growth and what you need to get that done and where you see that leading to?
Yeah, so this was the question that he had, is we went through heaps of things, and he said, with the liquidity, like with that injection, is there anything in your strategic plan that you're planning on doing that's waiting for this injection? And I said, no, I'm doing the plan irrespective of the injection or not. So he said, well, what the fuck? So it's just a feel good thing.
Yeah.
Do you just want to do it to make yourself feel better?
Yeah, to feel like you're growing.
Feel like you're growing. right?
I'm sort of against taking business loans out, to be honest.
Yeah.
I feel like obviously there's times and places where you really need it, especially if you've had bad advice or your accountant's stuffed up and you owe the ATO money or whatever. But in terms of for business growth, I think there is definitely places where it can be very beneficial.
100%.
But also I feel like if you've got a balanced business that's running in the right direction and you're counting for all the numbers, so you're checking where everything's going, your company or your business will generally be able to progress and you'll find the funds to be able to fund the growth, right? If you're artificially funding growth with expectations of additional income that's not currently present, I feel like you can end up putting yourself in a pretty bad position. Not saying it's true for everyone, but I do see a lot of business owners taking out short-term business debt and funding and then coming to us having to sell properties or fix up mistakes that they've made, right?
And do whatever.
Whereas if you've got a good trajectory, you've got income coming in and it's going in the right direction, I feel like that money should already be in the pocket, ready to fund the growth.
Yeah.
To a certain degree, not in all
the thing. Like this whole thing, you need 90 days of your...
What was what's your next steps in terms of growth and what were they going to be invested into?
Okay, so the next steps for everyone that wants to know, like for the next steps for us...
if you don't want to talk about
Nah, fuck it. Everyone that sits there and says, oh, you fucking hide... Mate, come to my office and I'll show you my books. Come. I'm not fucking hiding anything. Whatever you guys want to see. So the next steps for us mainly is that we're looking to bring an operations supervisor. We need another vehicle for that. All right. We're looking to bring on at least 1 or 2 extra estimators, which are an overhead. Everything I'm talking about right now.
Sure.
Oh, it's chargeable to a degree. Yes, but I'm just putting in the basket that it's non-chargeable.
Sure.
Tradies, ground crew, easy day. Get another carpenter tomorrow, bang, put them on site.
Sure.
I don't fucking stress about that aspect. It's the other side of the fence that I struggle with. And I'm talking to you guys real. This is stuff that I fucking struggle with. Guys that don't struggle with, they're fucking lying to you. Yeah. Anyone that says in their business that they just pull the trigger on everything, they've either got a massive money fucking pit from an inheritance somewhere, or they're just fucking lying straight to your face.
100%.
Right? So I know a couple of guys that have got a massive inheritance that they've injected within their business, which eases their burden with pulling things, but it makes them fucking lazy. Right? There's a lot of things that they don't give a fuck about. They just spend money willy-nilly, whether or not they got it or not. So for me, those key hires are the main thing. And in regards to funding it, it's just a matter of just rolling their wage, right, for that period. So
giving a bit of a buffer in place.
Bit of a buffer.
Make sure.
Right? So it doesn't mean that I can't fund it. I can, but it's like just giving me that little fucking extra bit of a fucking cushion.
It's a bit of a net to make sure you feel comfortable during that period. No, 100%.
Because as everyone knows, when you're in a shit spot, it's a lot harder to get money than it is when you're in a really good spot. 100%. And do you take advantage of getting it now, or do you fucking try to get it?
That's such a massive point. If you see yourself going down a direction where things are getting tight, speak to a broker well before that period happens, so you guys can plan and strategize and make sure everything's in place. If things are already fucked by the time you get to the broker, you've pretty much got no chance to fix it from there.
So, and this sort of goes into the next thing that I want to talk to you guys about as well. So anyway, I'll recap that. So that's our plan for the growth within the business. It's mainly into hires and people, not so much machinery and this, that, and the other. It's mainly just that aspect is more people to get us to the next point. Because we, as a company, we're getting offered bigger stuff, right? Which is better deals, better stuff, but we're not at that point yet. And it's like, do I wait 18 months and 24 months to be comfortable enough to bank the cash to then to pull the trigger? Or do I stay to the plan that I set in January and stay to the course and say, no, fuck that. I said I was going to do it. Let's do it. And be strategic with it and map our thing out for it. So that's essentially what we're doing at that aspect. And that's what
Well, I think you've done it the right way anyway. If you're doing it as like a secured business loan or secured against the property, I mean, paying the 6% on, 150 grand injection, you're paying 9 grand a year over, every week or month, that's not costing you much. But you do see a lot of business operators that take short-term business debt for 100, 200, 300 grand over like a 6-month, 9-month, 12-month term on 15, 20% interest rates. And it's costing them like 6, 10 grand a month. Some of my clients that have just consolidated, we've actually saved them over 100 grand a month in repayments.
Yeah, I think I've seen that one. That was fucking crazy.
That's how crazy they get. So that's what you want to avoid.
I think when I seen that one, I was like, holy fuck.
It's actually crazy.
That was nuts.
It's wild.
But another thing I want to talk about too, while we're on this whole topic of finance, business, what I'm doing and everything like that now, there's another big pro that I'm missing to the puzzle that a lot of people don't quite understand either, and it's something that you probably vouch for because you know as well. But having assets outside of your business is a massive pro because you can prop each other up. The way I look at it, I look at the business and my personal stuff as two different people. So I will leverage the business to a degree to do whatever I need to do. I will leverage the business thing to put myself in a better position personally. And then if push comes to shove, if the business needs it, I can then go personally and leverage what I've been able to build outside of that with the wealth, with the properties and whatever, and pull that money into the business and vice versa.
100%.
But if you don't have anything outside of your business, and I think that's where, I try to push a lot of guys that are starting in business, not to do it straight away. Inevitably, you don't want to fuck the golden goose, which is the business.
Of course.
Right? You don't want to be pillaging money out of the business and just buying Rolexes and doing all the dumb shit if your business isn't making any money.
Sure.
Right? It's just stupid.
Which you see a lot.
Which you see a lot of. A lot of guys think that they get their P&L and they've made 300 grand and they think, holy fuck, I'm a millionaire. I can go and do what I want. The reality is you can't do shit. The money's not real. It's only on paper. So that's where I think a lot of guys get fucked is they fuck the golden goose too early and then they've got nothing to show for it because the business isn't making anything and they got no assets outside of it. I think if you can do it the smart way, keep as much money as you can in the business, pay your fucking taxes, pay your super, everything like that, and then start building assets outside of the business. It's not about being, a fucking superstar and being selfish and you're doing that. I'm also doing that from almost like a risk standpoint as well.
Essential.
Right? So if the business did have a fucking shit run where we had an account open for 250 grand and they decided tomorrow that they didn't want to pay me and I'm up shit creek, I could then leverage my personal assets and go, okay, like, not that I would want to, it's an absolute last resort, but I would leverage that and I would pull that in if needed. But if I didn't have that, guess what happens then, guys? The business is in a shit spot. I got nothing personally. And then I go to the bank and try to do something. They're going to be like, no, you're already in a fucking shit spot. Like, you're fucked.
Being asset backed definitely helps. And especially like yourself where you've built a pretty good asset base now, is that you can afford to run the business thin and keep investing into it. And your assets in the background are still turning over and appreciating in value. You know what I mean? So you've got that to rely on as well.
Yeah. And I think, I guess the other thing I want to talk about too is what's probably some of the biggest things that you've found within, as you said, a lot of your deals are complex essentially with business owners and stuff. What's your biggest thing that you've seen that when you see them coming across your desk that you're like, fuck, like, is it the ATO debt?
Letting business cash flow loans because look, I have a lot of referral partners that are business cash flow lenders and they pretty much send us clients to fix them up once they've pretty much
Just explain what that is.
So business cash flow loan is essentially if you're self-employed and you have a business bank account, you essentially can provide 3 or 6 months worth of your bank statements to the business cash flow lender and they can get you short-term funding very quick within days to your business account, right? Now, they obviously add their broker commissions on there. It's non-compliant, so it's like non-bid, so it's not under regulatory compliance essentially. And these rates can be, if you're on a good rate, it can be like 10%. In the worst case, I've seen them like 20-25%, and they're short-term debt. And they can cripple businesses. So instantly, if I see or a lender sees that a business has been taking out unsecured business finance, it's usually a red flag. If it's secured finance, that's not so much of a red flag. But also ATO debt and not taking ATO debt seriously. Putting it on a payment plan is one thing that's completely normal, but then not paying your payment plan or letting it get to a default or even a director's penalty, it's very hard to come back from that. Once that's on your credit file, it's near impossible to try get lending to pay that off. And oftentimes you have to sell assets. There is lenders that will let us do it, but it becomes very hard to plead your case.
Yeah, so if you had 10, it might only pull you down to 2 people that'll probably do it, and the rates are usually not that favorable.
No, not for unsecured.
Yeah.
But in your instance, like if it was asset-backed funding, then and it's for genuine business growth, that can make sense. But a lot of business owners probably don't look after the financials as well as you do with your account and all that sort of stuff.
And another thing too, like just a side note before I go to the next thing, lending and banks and tiered banks, low doc, no doc, fucking blah, 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 blah. I think they all play a part.
Absolutely.
Right? I personally don't give a fuck. But I definitely know for the vast majority of people out there, if it's not the big four, they're like, yeah, nah, this is a shark. This is fishy. This is a shark. Fuck it.
I think it's the wrong mentality. I think you can get very far using non-bank lenders, especially if you're self-employed. I think you have to get comfortable with it.
And you use it as a bridge.
Absolutely.
Which what we do.
That's what we do all the time, and we can use them to our advantage. Sometimes I think the biggest thing as well is, your last year's tax returns might not be reflective of what your current financial position is in the business, right? So many times, even in your instance, where you use the last two BAS to indicate and show the bank that they're actually a lot stronger than they were this time last year. So can we run off these? A non-bank lender will say, yeah, no problems. Here's the funding for you. Whereas a major will say, we can't use BAS. We can only use last year's tax returns.
Correct.
So things like that, even simply just a letter from your accountant vouching for you, essentially saying that, Ideal Group Pty Ltd makes such and such profit for this year. And you can run off that, not needing tax returns. And yes, the rates are slightly higher, but really not as bad as what people think. We're talking maybe like 1% on an investment property. And if you think about, acquiring an asset that's going to appreciate 10% a year, if that's, 6 months Band-Aid fix to get you back over to a major, it's definitely worthwhile.
And these are all the things that we talk about. All right. So this is why there's always a way to do it. And I'm not just talking about this as it's a nice to have if you're a business owner. I think if you are in business legitimately and it's something that you're in for a long time, I think you should be doing this sort of stuff outside of your business as from a risk point. And, Tamara's had to, she obviously was a bit like when we started the journey with the non-tiered lenders, and, this is not a fucking big four. And like, she's learnt as well that, and she understands now as well, even though it's fucking annoying. Some of these banks out there, they make it so fucking difficult, but like you're using it as a bridge. Absolutely. It gets us from A to B and that's it. Like we're not signing it. We're not going to be there for fucking 40 years. It's just for a short period of time. Like, I'll give you real life numbers. We purchased, I think it was Logan Lee.
Yeah.
We got a house down there, 725.
Crazy.
Right. So and we picked that up.
Perfect timing.
Right. We picked that up. It was fucking backwards and forwards for fucking ages. And then it went to auction, got it exactly at auction what we were offering initially, but it was only 2 months early. So we picked that up. And we went with a non-big four, right, for this. I think, I don't know, tier 2, tier 3?
Tier 2. Honestly, I think tier 2, there's a lot of non-banks in that space that are pretty good.
Yeah.
I think when you start going to 3s and privates, that's when you're going to start being worried.
Yeah. So went to a tier 2 and, the rate was a little bit higher. And we picked it up for 725. And as of I think it was March last year. Fuck, I can't remember. July?
What did it value?
880.
So
890, something like that.
How long is that period?
Well, it was actually 120. It was actually 125, but it was with the.
That's with the grand extensions and all that stuff. Yeah.
So that's obviously something else. So within that period, it's obviously generated that much. So it's like if I sold tomorrow, we put the for sale sign at the front. I've done fucking nothing to it. Bought it for 725. Could sell it tomorrow for 880 with nothing else on it. We've held it for a year, not even a year.
And we use the BAS to get it done.
Exactly. Right.
Whereas, if we're looking at a major, wouldn't have been able to get that done.
Wouldn't be able
you
to do
would
it.
have lost 150 grand or 160 grand, whatever you've made on it.
Yeah. So obviously that's that was a good outcome, and that's something that we've done. And like I batted off you, you batted off me, like me and like we've gone like we both sort of in that same sort of thing. So same sort of thing, guys. So like you've got your options there to do it, and I strongly advise for a lot of guys to do it. And don't be scared about the whole 1% more and fucking, because you're right. If you're making 10% a year, you're only fucking, it's 1%. It's not the end of the world. And if you're only with that bank for 2-3 years, who fucking cares, mate? Like, move on. It's fine. 100%. So, but yeah, so that's about all the lending and the business, everything like that. And talking about July 1st, right? Because I've had a lot of people come into my inbox and ask me about some questions in regards to what's going on with the ATO and this super thing that's happening in July 1. So they're now moving to same day super.
Yeah.
As of July 1.
Yeah.
And if you don't, the ATOs ain't going to collect. Someone said to me the other day, I fucking seen a DM, it was like, oh no, that's not true. The ATO doesn't collect super. I'm like, no, they don't, but they monitor it.
Is that what they're saying they're going to do?
They're not going to collect it, but they're going to charge you a 200% interest fee.
How much?
200%.
That's insane.
On unpaid.
On
the day of. So if you lodge pays on a Wednesday and you don't pay it the same day, it's 200%.
200%, really?
Yep.
Is that really what it is?
Yep, that's really.
I got an email actually this morning from my accountant saying you had to pay this super for this quarter, and she did advise me of those changes from January 1st. But I think if you're a business owner and you keep those things aside, if your accountant's looking after you, so my accountant's awesome. She literally tells me every month on what money I need to keep aside and separate from the business to pay for income tax for my employees, super, GST payments coming up, all that sort of stuff. And that's what you pay them for, and that's what they're going to keep you accounted for. You shouldn't be spending that money anyway to begin with.
Yeah. Well,
personally.
All right. Every business owner would be fucking lying to you if they haven't used it.
Absolutely.
Right. And I think
I've moved funds around, but I've always got it ready to pay when my accountant says it's time to go. Like, I've got it there.
And I'm not a fucking saint either. I've also ended up with my fair share of fucking tax debt as well. Right.
100%.
I have had a payment plan, and I've only had fucking one, all right, before anyone jumps in there thinking that I'm fucking not paying tax. I only had one, and fuck yous, I paid it off. I don't have any more fucking ATO debt. But every month now we pay it on time in full, no matter what. But the super side of it, the reason why I'm talking about it is I have a feeling that a lot of businesses, mainly in the trades community, because let's be real, I think trade businesses are one of the most fucking diabolical, like I think it's one of the most like up and down industries ever, right? The amount of shit that you need to backlog, like to roll. If you're on a 30-day account or 45-day account and you got 25 staff at a $50,000 a wage payroll per week, you got 4 or 5 weeks that you need to roll before you receive a single cent from anyone.
What?
Like it's crazy, right? In any other industry, you get paid beforehand or you get paid on completion.
Yeah.
Right. So it's like going into a doctor's office, having a surgery, and then being like, I'll pay you in 30 days.
Yeah.
Nah. You're paying before you fucking.
I agree. It is hard. And as you said, like, a lot of builders and their margins are like 10%. So you're riding pretty thin already. So if you got a big super bill that comes up or income tax bill, it can affect you. But I mean, how do you manage that as a business? Our situation might be a bit different because we don't have as much super depending on our employees compared to yours.
But it's all contextual.
But how do you manage that?
Yeah. This is what I'm talking about, is I think by having the ability to go to a broker and forecast, and I think this is why this podcast is a fucking perfect time, why I actually wanted to talk about it and why I thought I want to bring you in now, is because for guys that are in shit creek and not facing the facts with their current situation with tax or super or haven't paid anything, it'll fucking sink you.
Catch up to you.
I had a guy speak to me yesterday on site. He's an older guy, and him and his wife had to sell their fucking house because they came and collected $380K from an old business that he shut down because he didn't pay his employees super. So he had a business for like 15 years, didn't pay anyone super, shut the doors, continued trading, working for someone else. Then they came and gave me a director's notice and said, you're either going to fucking do X, Y, and Z, or we're going to collect your assets. So they were forced to then sell their house. The equity that they sold for paid the super off. So the reason why I'm saying it is I would highly recommend that a lot of guys have a look at the fucking face the fact, like get in there, see how much it is. If it's 100 grand, 200 grand, whatever the fuck it is. If you've got a house, if you've got a broker in touch, like get in contact with them and find out what situation. Because after the fact, like we said, 20 minutes ago, it's going to be a lot harder for you.
Are they changing it to pay cycles or monthly?
Pay cycle.
So every week you have
Same
to pay
day.
super. That's crazy. But it's gonna come to the point
It goes through your portal. So
well, does your accountant do your payroll, stuff like that?
The girls do.
Well, I think you just need to get them onto it, and it's just we need to account that wages are going to cost us 11% more every week.
Yeah.
And you just have to be ready for that.
Yeah.
It just gets processed like your direct debit.
Like for us, what we did, so everyone's fucking, I'm transparent across the board. We picked it up in February this year. We knew it was coming in July 1. So we prepaid. So I think February you didn't have to pay that portion until April. So we were floating that period. It's obviously in a separate account, but the money was there. And when I say it was there, it was obviously in motion with whatever we did. As we did, you move from here to there, move it around. So we didn't actually have to pay all that lot until April. But what I did is I said to the girls in the office, no, we are going to get ahead of this fucking curve, right? Because we got, 26, 25 people on payroll, 27, on payroll, right? So there's a lot of people's fucking super that we're paying. So I said, no, we're going to bring it all forward as of February this year, and we're going to prepay it. We're going to pay it all now.
Yeah.
Right. So we basically pulled it forward, which fucking dumped our regulation account. Like,
Of course.
Synced it. Right. Because all the money that was there wasn't all there for super.
Of course.
It was there for other shit as well. So, but we strategically did it when we pulled it all forward, and then we went weekly from there.
Okay.
So
So
we
you've
were
already adjusted.
We'd already adjusted.
Okay. And
Because
are you still doing that now? You're
still
already
doing
paying
now.
weekly?
No, still
so
doing.
you're ready
We
for
pay
it?
weekly now. Yeah,
So-
for now we are. But like, I did that because I wanted to get ahead of it.
Of
Because I
course.
didn't want to end up. I don't know what the fuck how they're going to do this in
Yeah.
July. I don't know if it's going to literally be, because they keep preaching. I get everyone fucking tell same day super, 200% interest. Like, I don't want to go home one afternoon, have get a letter in the mail, open it up, and it's like, oh, you've got $40,000 worth of super
Yeah.
unpaid
Yeah.
because you didn't pay it the same day. And by the way, we're going to hit you with a 200% interest.
Exactly right.
Like,
100%.
fuck. Like, and then you've automatically got to then rush around and try to get it sorted. And then does that then
Yeah.
go again? Like, do they then start doing director's notices against that? Do they not? Like, I don't know how they're going to monitor it, but I just didn't want to do that.
So for businesses that are maybe not as far along in their journey as you, how
Yep.
do they adjust or prepare for that to make sure they can pay it weekly?
I think the biggest thing is that if they can, this is what I mean. I think have a look at your books. Say for instance, you've got $20,000 that you'll still have. That you say for instance, you got $0. You got $20,000 to pay in super and to catch you up, and you've got $0. I would recommend, not a financial advisor, I would recommend that you don't worry about the $20,000 right this minute. In the next pay cycle, go straight to weekly, straight away. Set the fucking precedence in your pay cycle with your accountant or your person that does the pays, whoever it is. Say to them, as of next week, irrespective of what's in the account, we're going weekly. Because then what will happen within osmosis, you will then automatically adjust everything around you, all your expenses, how you bill. It'll almost just like, for us now, it's week. It doesn't matter. It's just how we are. I reckon pull the trigger on it straight away. Work out how much is it to consolidate you up to date. So it's 20 grand, 40 grand, 200 grand, whatever the fuck it is. If you haven't got the money, go speak to someone. Go to a
What
broker.
we need to do,
Yeah, go to a broker and say, listen, dude, I need to pull $50,000 of equity out of my property. I need to do this. What for? Where, I don't know if you need to disclose whatever it is, but you can say whatever the fuck you want. It's for growth. It's for liquidity. It's for whatever the fuck you want to do it, and then pay it off.
100%.
So then come July 1, you've clean slate the thing. You pulled 50 grand of equity out, which would equate to being absolutely fuck all. If you've got, you're talking, I don't know, $20 a week, something like that. I don't fucking know. Not much, right? That's what I would do if I was in that situation, just because, the thought of being behind it and then trying to pick up the pieces after the fact is a fucking nightmare. And like, I know for a fucking fact there is so many guys that I know that are within business that have an exuberant amount, like 6 figures more of super unpaid.
I see it all the time. Super, GST.
Yeah.
Do you pay your company tax return in advance? Do they make you pay that?
No, we got it. So if we lodge in July, say for like we get taxed on the profit, we don't pay that until March.
So mine now is every quarter that I do my BAS, they charge me preemptively for the next year.
Yeah. So now there's another thing too. You can actually get around that a little bit. So you can get your.
I don't mind it though, to be honest, because
you don't mind it, but then you're sort of you're paying it forward.
You are, which is obviously cash. If you need the cash flow, then it's a shit go.
Yeah.
But also the way I look at it is like, fuck, I'd rather pay that whatever 80, 100, 150 grand over the next 12 months leading up to the financial year than get hit with 150 grand.
We yo-yo between it.
Yeah.
So 1 year, the books will be, so they click you on and click you off. It's like a fucking light switch. They'll go, Jem, you made this year profit, next year we're going to make, we forecasted this, we're going to get you to pay your fucking thing up front. Then the next year, you might not have made the same. Then they'll flick the light off and be like, we'll just sort you out and thing. So you can strategically work out a way to yo-yo between it. And on the years like we are, we're off it.
Yeah, okay.
So then what you do is come July, we are expecting to end up with a tax bill,
A huge tax bill.
which you don't end
Decent
up.
tax bill.
Yeah, which you don't end up. You don't pay until March the next
Yeah,
year.
okay.
So you've got 8 months
Okay.
to come up with it,
Yeah, that's pretty good.
and then you can actually during that 8 month period you can consolidate and get it on a payment plan.
Yeah, okay.
So before you
And
shit
during
your
that whole period, you've got extra money that you can play with for the business. that you
exactly,
need to do.
which I need.
Yeah.
Right. So
Yeah.
the thing is like we're expecting that that's going to happen in July, which our accountant will then push that profit, that payment for that tax period into March. And then we would then just be, we can then consolidate it and pay it off on a plan and say, not on a payment plan, but because it's, you just whatever, but
Yeah.
you would just say to them, okay, it's due in March. Let's now put away this much a month.
Yeah. So
And
then
we'll
you're
just do
ready
it
when
like-
it comes March. But even when March came, you can probably put on a payment plan then if you really wanted to.
Or this
But
is not
4% interest.
this, yeah. Or what you can do is if you're backed by personal assets.
Yeah.
This is
Well,
another
that's-
thing that I've spoken to a lot of guys about as well, and this is another thing
100%.
that the more that I understand business, the more I understand that you can. It's a finance game. You can manipulate things, but if you're backed by personal assets and your business you've had a really really profitable year, massive. Let's say you net profit $1 million, so you now have
250 grand.
250 grand,
Yeah.
right? But let's just say you've done that $1 million, and that's now put you in a good servicing,
So yeah.
right? So you can now go out there and I say to Jem, listen, bro, mad year, here's my account. And you're like, yeah, fucking oath, your servicing is good. Let's go and purchase some shit. So the bank's now going to give me money and they're going to go, Corey, you good to fucking go, dude. Go out there and purchase X, Y, and Z.
Yeah.
So I go and purchase that. Come March the following year, I'm still rolling on the same tax return. So I could then go back to you and say, hey, I got a steal on this deal. I got this deal done, whatever. It's sat for a little bit, or I've got these other assets that I haven't refinanced in a while. Let's refinance one of these. I just need to
I need
pay off.
250 grand for my tax bill.
Right? Well, not 250, but like
Well,
if it
you
was
could.
whatever, you could.
You could. You definitely
could.
You have to speak to the accountant about how to structure that, whether you
100%. This isn't financial advice, but you can fucking do that, and like you can manipulate. I wouldn't fucking do it every time, but I'm just saying if that was the case, you could 100% do it that way if you wanted to. Which I know for a fact guys do that by manipulating their books to do so.
Of course.
Right? Because
There's actually nothing wrong with doing that.
there's nothing wrong with doing it. It's your money anyway. So you're just pulling it out of equity to fucking do X, Y, and Z. So it's like you can do it that way, which if you showed $1 million in net profit, how much would that give you in servicing to fucking go out there and buy it?
$1 million in profit, say 5 to 6 times, we look at like
Yeah.
the DTI,
Yeah.
so $5 to $6 million worth of assets or loans.
And let's just say, for instance, you had one asset that you purchased for $5 million and it grew at 10%.
Exactly, that's 500 grand worth of equity.
1 year.
Exactly right.
So there you go. All right, you clear your fucking ATO, the tax, your income. Anyway, so there's all that sort of stuff that you can do, which I have spoken to guys about and that they have done before. I have never done it, but I know that that is an option. And that is why I wanted to actually do this podcast, is because I think there is so much value in being like you can.
What do you think about, I don't know if you're even allowed to speak about it, but what about using company profits for personal use and then repaying the business and things like that? Because obviously as you're expanding as a business and in your personal assets as well, obviously that's a fine line and you have to juggle. I've got the money here in this account. I want to make this acquisition. How do I make it, but then pay back the business for the end of financial year and all that sort of stuff? Or is it too not to discuss?
No. I don't care. Fuck. I don't have the government watching this shit. I don't think I've pulled it out for like. Are you talking like personally been able to like fund for like a deposit?
We'll say you've got like 300 grand sitting in the business account.
Yeah.
And you're like, fuck, I need 200 grand to make this purchase. It's a great fucking deal. If I just take the money from the business account, I'll pay it back, in 3 months or 6 months. No one will know anything in happy days. A lot of people do that.
I don't fucking know, dude. We're up in that thing. You got the Div 7 loans and like you got all this shit. Speak to your accountant on that one, guys. I got fucking no idea. But like, I think it's like, if it's not that much, I don't think it's that big of a deal. But if you're talking like 6 figures, it might be a little bit hard to move that money in and out. But I don't think I haven't done that yet. We pay ourselves a dividend.
Yeah.
From retained earnings, but
that's another thing. Actually, I wanted to discuss that with you as well, because I do the same thing with my accountant and business owners that pay themselves dividends. It's a lot harder to use for servicing than paying yourself a wage.
Well, we pay ourselves a wage.
Yeah, so yeah, you do.
Yeah.
But a lot of business owners, they might have the company profits, and then they might just pay themselves like $100,000
Yeah, like
dividend.
drawings. Yeah,
like
just-
$100,000 dividend or whatever at the end of the year.
Don't do that.
Don't do that. If you got plans to grow in assets or get lending, try not to do that, because banks won't consider dividends as income, because they can be paid from companies' retained profits that have already
Yeah.
been accounted for.
Yeah, correct.
So ideally, have your company profits and then a decent wage that you pay yourself as well.
And this is a good topic. This is a good one. Because, yeah, I know a lot of guys that have run businesses before where
Yeah.
they're actually not on a wage.
Yeah.
They just invoice 10 grand, get paid 10 grand, use that fucking bank account, use that bank card for personal spending. It's fucking, it's the wild, wild west.
I've seen it.
Right?
I've seen it all.
Wild, wild west. So don't pay themselves a wage. Just use that business bank account. You know, go to Woolworths, do this, do that, like just with whatever.
Yeah.
But it's like you need to separate yourself. Whether it means that you put yourself as an employee, one employee, and you pay yourself a fucking minimal wage, do so. And the further you can separate yourself, the better it is. And just understand the business is the businesses and you are you.
Exactly
You know,
right.
we pay ourselves now, but it wasn't always. I'm paying myself a figure now, but I wasn't always paying myself that. I'm paying myself like $650 for fucking ages, but I was still on a wage, so I still had to pay my super and everything like that. I never did drawings, like I never really did it like that. We pay a dividend now, but that's also from talking to my accountant.
Yeah.
She understands my goals. Why I'm paying the dividend. I'm not paying the dividend to go out there and fucking buy jet skis and shit, and it's just extra cash in the thing. We're doing it strategically for a fucking reason, which is servicing or helping us service the personal assets that we got.
Yeah.
So we do that because on the other side of it, 25% on the taxable thing on the dividend,
Yeah.
company
100%.
tax
It's already franked.
is better. Yeah, it's already franked on that versus going and doing it, increasing your wage over and above,
100%.
which you're at fucking 38%, 42%, 45%, 47%. Fucking,
100%.
it's ridiculous. So that's why you have a good accountant that you can talk to about and understand your goals. Once I understand your goals, then you can discuss and be like, okay, do I increase it? Do I not? Do I pull a
100%.
dividend? Do I not? How's that going to work? Because guess what? Pulling a dividend is also, it's not free either. Like there has to be an accounting aspect to it as to how it's going to work.
100%.
Otherwise, you will end up in a Div 7 loan if it's fucking, and you got to pay that money back.
100%.
Otherwise, the ATO will come for you again and tax you on that
100%.
at an interest. So
It's pretty complex. It really is when
Yeah.
you look into it, but it's not that hard to understand. But just if you are going for loans, remember that dividend won't be looked at by the bank when you're going to assess how much can I borrow. So if your company's showing zero income, your individual wages are zero, and you're like, but I got $100,000 dividend from my company, the lenders won't view that as income towards servicing.
do they view inheritance?
Not towards servicing, as assets and equity potentially,
Yeah.
but
Not for servicing.
not for servicing. Like, to give you an example,
Well, say for instance, I was on,
unless you inherited a business.
yeah, which would be, you inherited business, but it's fucking negative.
Yeah.
You just inherited shit. Let's just say you were doing, you got an inheritance of $150,000.
Doesn't matter. If you got the funds to complete the purchase and your servicing allows, we can get that a personal loan.
Yeah.
That's fine. Not if you're a first home buyer. Oh, actually, even if you're a first home buyer, you could.
Jim can get it done. Yeah, he can get it done.
No, as long as it's in your bank account for 3 months prior to that loan application,
Yeah.
you're sweet.
No. Well, as you can tell, guys, me and Jem can sit across here and just talk shit. I actually forgot the mics were on for quite some time there. But look, we got a little bit sidetracked with some of the stuff, but I think we gave you guys enough. That was about, how long was that? Just under an hour, mate. Cruising. So, time went fast. But I think we gave you guys enough little insight, tips, and tricks for you guys to do it. If you want, I think I'm gonna get some people reach out to me about this one for sure. Which I'll try my best to get back to you with. Jem will be tagged on all these posts as well. So reach out to him with all those sort of questions as well, and he will help you. But I want to thank you again for coming on.
Thanks for having
Time
me
went
on, man.
fast,
Really
dude.
appreciate it. Really
I
do.
went fast.
I feel
And
like
I
we
could talk
didn't-
about it for fucking ages.
Well, I feel like we didn't even touch on that much stuff. So
Yeah. Well, I think we did. And that's the thing is we talked about super coming up.
Yeah.
We talked about the pros and cons of getting your
Yeah.
freaking your your personal assets. We talked about
Do's
all
and
the stuff,
don'ts.
the do's and don'ts. There was heaps of stuff that we talked about. So you guys would have got a lot of context during that spiel as well about myself, what I'm doing, how I did it. But wait, reach out to Jem. If you got any further questions, reach out to me. I'm more than happy to help. It's a passion of mine outside of these four walls and, hammer and nails. It actually is a passion of mine. I enjoy property. I enjoy that aspect. But as I said, I don't fuck the golden goose. The business is the business. You got to do the right thing for it, which I try to spend most of my time. So, all right. Thank you very much, Jem. Appreciate it.
Appreciate it.